Ladies and gentlemen, welcome to the study. Going to be talking about, well, the stock market is selling off again in 2022 this time, and why you shouldn't panic with a stock market sell off. And as always, with every video I post on YouTube, none of this is a recommendation to buy or sell any securities and is for educational purposes only. Before we get started, though, I need a huge favor. If you made it this far into the video, please make sure to tap the like button. That helps me out a ton and it is greatly appreciated. In these moments of history in the stock market, as a long term investor, your best bet is to just avoid the noise. Set it, forget it, take a vacation because you're already committed to investing in the stock market for the long term and you're going to enjoy the ride. And that is why I have a 10-year chart pulled up of the S&P 500 ETF, SPY. You can see that over the last 10 years, and I can highlight them, you have the market going down here at this point, you have the market going down here. That was from 2013. Then at the end of 2013, then in 2014, you have this sideways action. Then we're going up in 2015. Oh, look at that. A lot of red. And then, you see this pattern moving forward. Again, same thing here in 2015 going into 2016, elections, Brexit, all those kind of things. And then you have the market go up from here, and fast forward, you have another crash right here, 2018, 2019, Fed repo crisis taking place at that time. Then the one that's most recent that a lot of people know about or talking about, coronavirus, and oil going to negative $1 barrel. And then guess what, though? You look at this, and we're going up, and, well, now we're going down again. So what is going on here? And what I'm saying is with the long term, that on a long term time horizon, you can see that the stock market has done pretty fairly well. And now for those who are saying, hey, I could have sold my portfolio and walked away with a ton of money. Okay, and then what? Seriously, I mean, what are you going to do with all that money you pulled out? If you want to take some money out near the top, like some people have done, then this is a great idea if you want to pay off some loans or other debt. I agree with that. Or maybe you want to move it into a property. That's another effective strategy, real estate and all that. But besides, investing in the long term requires you to go through these swings of up and down through the market. You are not going to be, let's say, buying a house, right, in the real estate game, and then just selling out of it. It's not as liquid as the stock market. There's a lot more loops and holes to go through with buying a property. And, well, you kind of have to have the same approach when you're in the stock market. There's a lot of volatility, and you don't really want to be getting nervous or getting weak hands and giving your money back to the market makers, and all of a sudden you're taking a negative 20% loss when you have your money parked in a very great company with sound fundamentals and is just expanding and growing at a ridiculous rate. And next thing you know, like 5 years, you took that negative 20% loss and that company ends up appreciating to 100% return or more. Which leads me to my next point. If you're trying to time the market with all of this going on, good luck. This is a very difficult task to do while trying to balance everything else you may have going on in your life. So here's the deal. If you are working for one of these hedge funds or these banks that have to make a certain amount of money to reach a certain target return rate, I get it. It's a day-to-day business. There's a lot of struggle with that. But as a retail investor, as not commanding a major cruise line, you are just a little boat. You have the ability to just maneuver nicely in the ocean, and nothing should be really distracting you or taking you off track. You can make adjustments as needed along the way Whereas with these bigger boats or these bigger banks and corporations and all of that involved, it's not as easy. It's a different ball game. You are not playing that ball game. You are playing your solo adventure ball game here, and you have to follow through with your plan. It's the most annoying thing to hear over and over again, but that's really what it comes down to, because human emotions can really mess up sound fundamental judgments that you are making. Like, you can actually come up with a hypothesis or a well-educated investment thesis on your goal, and all of a sudden your emotions kick in and just hijack your plan. That's very possible. It happens to a lot of people. There's so many research papers on this. So while we're in this volatility, right, we are going to have probably more market selling pressure and see more new lows along the way for the year. But guess what? These are very rare opportunities where you can buy stocks at a discount, or even crypto if you're a big follower of cryptocurrency and into that. That's interesting too. You just have to make sure to do your homework. And very much like you have a Christmas wish list for gifts, you can have a stock market wish list for certain stocks you want to purchase at a unique discounted price. Just make sure that you're investing in what we like to call a quality company with the future that will be around for 10 years plus or so. Because when you do buy into these companies, you're going to experience the potential for massive gains to the upside as a long-term investor. You are using the long-term horizon to your advantage. Look at this chart. This is the S&P 500, top 500 companies in the U.S., SPY ETF. You can be a part of this by just parking your money in, maybe not even the companies, just park it in an ETF as well. This is a basket of a bunch of different stocks in one. That's another approach. The idea is you do not want to be trying to time all of this. This is very difficult to pull off, and we are looking at this at a long-term horizon. And when you zoom in and look at these specific movements on these specific days, it is very wild to and very stressful to be able to try to capture all of that. And we had this crash in 2020, and the financial crisis in 2008. And you know what? Guess what? These were all horrible events, and the media scared many investors, causing panic. But guess what? You're looking at the time frame here, 10 years. The market recovered those losses and continued chugging along to new highs. I strongly believe this will continue in the same pattern, judging by history being on our side. So, Dave, what do? You start researching companies. Do your homework. Make a list of quality companies you want to start putting some of your money into. And then make sure you also have extra money saved up to be able to take advantage of these rare moments in the market. On that note, I just want to make sure before I end the video here, you have to make sure you have money saved up to take advantage of these rare moments in the market. I just said that. And I'm saying it again because, again, look at this large 10-year time frame. For the majority of this 10-year time frame, the market is going upwards. You don't really want to be buying a asset when it's at the high. You want to buy it at the low. So keep that in mind. Guys, on that note, I want to say thank you for tuning into the video. If you enjoyed this video, make sure to subscribe for more content. You can visit me at thetradestudy.com and follow me on Instagram at thetradestudy. I post some investing education content and fun stuff there too. So thank you again for watching and hope this video helped you out. I'll see you in the next one.